The Sale of Goods Act 1930. Till 1930, transactions relating to sale and purchase of goods were regulated by the Indian Contract Act 1872. Indian Contract Act, it was evolved the 1st September 1872 with 266 sections, and Section 1 to 75 deals with the general provisions. Section 76 to 123 deals with the sale of goods. Section 124 to 147, it deals with indemnity and guarantee. Section 148 to 181, it deals with bailment and pledge. Section 182 to 238, it deals with the agency. Section 239 to 266 deals with partnership-related activities. In 1930, Section 76 to 123, that is the sale of goods, was removed from the Indian Contract Act 1872, and a separate act called the Indian Sale of Goods Act 1930 was passed. It came into force on 1st July 1930. With effect from 22nd September 1963, the word Indian was also removed from the existing act. Now, the present act is called the Sale of Goods Act 1930. Section 4 defines a contract of sale as a contract whereby a seller transfers or agrees to transfer the property in goods to the buyer for a price. What are the essentials of this contract of sale? Two parties should be there, goods should be involved, the transfer of property should be there, then price should be mentioned. The essentials of all elements of valid contract should be present. Two parties, there must be a seller as well as a buyer should be there. Buyer means a person who buys or agrees to buy the goods as per the section 29 of subsection 10. Seller means a person who sells or agrees to sell the goods, section 29 of subsection 13. Next one, goods. There must be some goods. Goods means every kind of movable property. The sale of immovable property is not covered under Sale of Goods Act. Third one, transfer of property. That is, ownership should be transferred from one person to another person. Here, the property means ownership. In a contract of sale, it is the ownership that is transferred, that is in the case of sale, or agreed to be transferred in the case of agreement to sell, as against transfer of the possession. The fourth element, price. The consideration in a contract of sale has necessarily to be money. When there is no consideration, it amounts to gift and not for the sale. For instance, goods are offered as the consideration for goods. It will not amount to sale. It will be called as a barter. To sum up, the act applies only when the buyer pays by cash or by check or by credit card, etc. What are the essential elements of valid contract should be there for the sale of goods? All the essentials of the valid contract as per the Indian Contract Act 1872 must be present. The parties to the contract must be competent to contract. The consent of the parties must be free. The object of the contract must be lawful, and so on. Sale and agreement to sale. Sale, where under a contract of sale, the property, that is ownership in the goods, is transferred from the seller to the buyer. It is called a sale. A sale is an executed contract. Let's say agreement to sell. Agreement to sell means a contract of sale under which the transfer of property in goods is to take place at a future date or subject to some conditions thereafter to be fulfilled. Classification of goods. Goods may be classified as existing, future, and contingent. Existing goods are those which are owned or possessed by the seller at the time of the contract. This again classified into specific goods and generic goods. Specific goods means goods identified and agreed upon at the time of the contract of sale is made. Generic goods through normally used as synonym for specific goods. Generic goods are goods indicated by description and not specifically identified. For example, Mr. Anthony, who owns a TV showroom, has 20 TV sets and agrees to sell any one of them to me. The contract is for unascertained goods, since which particular TV set shall become the subject matter of sale is not individualized at the time of the contract of sale. Future goods. It means goods to be manufactured or produced or acquired by the seller after making the contract of sale. For example, Mr. Kulkarni agrees to sell the future crop of a particular agriculture field in the next season. This is an agreement to sell the future goods. Contingent goods are the goods the acquisition of which by the seller depends upon a contingency which may or may not happen. Contingent goods is a part of the future goods. For example, Alcom agrees to sell to Vivek a certain painting only if Chetan, its present owner, sells it to her. This painting is classified as contingent goods.